If you haven't heard about Anchor, it's the easiest way to make a podcast. Let me explain. It's free. There's creation tools that allow you to record and edit your podcast right from your phone or computer. Anchor will distribute your podcast for you so it can be heard on Spotify, Apple Podcasts, and many, many more. You can make money from your podcast with no minimum listenership. It's everything you need to make a podcast in one place. Download the free Anchor app or go to anchor.fm to get started now.
Hey everyone, this is Jerry from the Money Vikings. Today is October 18th, 2020. For tonight's podcast, we're going to talk about Bollinger Bands and the MACD indicators. Basically, we'll cover everything indicators. We hope you enjoy the show. Have a great day.
We are not financial professionals, and this podcast is designed for entertainment purposes only. We are regular folks who do research and present opinions to an audience in a fun way. Our opinions should not be construed with the views of any organizations we may be affiliated with. This podcast does not represent the thoughts, intentions, plans, strategies of our employers. It only represents the opinions of the authors. If you need specific guidance on your own financial situation, please consult a financial fiduciary professional.
Hello, everybody. Welcome to the Money Vikings podcast, number 14. How you guys doing? Jerry, Bob, you guys there?
Oh, yeah, we're doing great.
1, 2, 3. 1, 2, 3.
You're doing great. I have to admit, guys, I'll just throw this out there. I'm doing great, but I got a little pandemic fatigue and I got a little election fatigue. I got to tell you.
Oh, so, yeah.
Anyway, is what it is, but
just got to make the best of it and move on.
Yeah, I like
pull
that.
Your hair out, man.
I like that shirt.
We are, maybe this will cheer up. We're huge in Belgium.
Oh, that does cheer up. Hey,
it.
Well, this will also cheer people up. We got a great show for you guys today. We're going to talk about indicators or predictive powers of trading. We're going to talk about Bollinger Bands, talk about statistical chart characterization, and we're going to talk about moving average convergence and divergence, MACDs. So what does all that mean? What does all that mean? So here's my initial thought on all this, guys, and you can kind of, I wanted to kind of frame this up for people. These tools and these ways of analyzing investing, in my mind, are really useful as part of a complete reactive trading system. Okay, so I guess here's my point. For the vast majority of investors and traders, these concepts are mainly tools for day traders, right? Do you think? You don't? Okay,
no.
Well,
Not for day traders. Not just for
okay.
day traders.
Okay.
Day traders.
Well, you're
some components maybe, right? Some.
okay.
But
okay.
I think
well, I'm going to learn
for
a lot
the most
tonight.
part, there's
All right.
a bigger picture.
I guess my point is, this is good information, and people should learn it.
Testing 1, 2, 3.
But at the end of the day, I think before people dive into this kind of stuff, they should have the basics of like sound financial foundational stuff down, right? They should have like debt under control. They should have their automated investments into index funds and ETFs. And then comes the kind of stuff we're going to talk about, the fun money, the outside the box creative stuff, right?
Yeah, I would agree. Although it is a known fact that the more indicators you put on your charts, the more money you make.
Yeah.
Are you being serious?
That's a joke.
Okay.
That's a joke.
Okay. So you had me.
Absolutely.
Right,
Absolutely.
Indicators.
So here's the thing, Greg. I think the way that it needs to be looked at is that you have to have your foundation set, but the indicators are I don't want to say like the cheat sheet, but the indicators are the extra tools in your tool belt to help you make the right choices, the right picks at the right time. And so kind of to your initial comment is, yeah, it can be for day trading. It's very useful, but it's also useful for the swing trade, the long holds, like knowing patterns. So it's just a tool. It's extra tools in
I
the
love
tool
it.
belt to help you maximize on
Yeah, I would
profitability
agree. I mean, a
when
lot
you're
of it
doing
really
whatever your
depends
trading style
on
is.
the time frame that you're looking at. If you want to just get in and get out and do a futures trade or a scalp, they can be very excellent tools for helping you kind of gauge that. But if you want to look at something over a 30-year period, you can put on the exact same indicators
Yeah.
and they're giving you the same information, but a slightly different time span and
Now,
perspective that can be used for
okay, you
long
guys
buy
are
and
blowing my
holds.
mind. This is great. So walk an average investor through
Yep.
where they would go. I mean, where are they going to find this information? Can you take like a stock and look at its indicators? Like, we got earnings call next week. I've noticed we got Next Era Energy up. Would somebody be able to
Right.
look at their indicators?
Sure. Yeah, I'll tell you what. Why don't we get started? I'll kind of do a little intro on how someone might get started. I'll talk a little bit about Bollinger Bands, and then we can talk to our listeners and investors about how they can get started trying these things out, because they're available in pretty much every trading package. These aren't obscure ones that I mean, except for maybe Robinhood. I don't know. Maybe Robinhood Web. You can turn on their web. They
I don't think Robinhood doesn't have.
Yeah, but
Yeah, they
these
don't have
are
Bollinger Bands.
very
I don't think they have Bollinger
popular
Bands, but
types
they have a lot of the other components.
of overlays. I think that's what they call
Yeah.
them, overlays that can be put on top of charts. So you're looking at candlestick charts or lines. It doesn't have to be candlestick even. That's a whole other episode right there, how to read those. But they're basically superimposed over. Let's say you're looking at a 1 month of Tesla. And you kind of, I mean, obviously you can look at something and you can get the sense of the trend. It's either going to be going up, it's going to be going down, it's going to be flat, maybe it's going to be very volatile and unpredictable. That, I think, may be enough for many people just to look and see kind of what's going on, to get a feeling for the stock. And you can you do these on stocks, you can do them on futures, you can do them on agricultural products, you can do them on options even. There's no law that says this just has to be for a stock for a day trade. But you go into your platform, whatever you use, trading. I have Trading View open right now. I'm looking at Bitcoin, and I've got Bollinger Bands on them right now. It's pretty cool. But indicators can be they can be leading or they can be lagging, and by that I mean lagging is taking information that we've already got, and it tells you kind of what's happened, and you can use that to maybe guess what's going to happen in the future. You kind of have more data points and more informed decision that you can make before you buy or sell or do nothing. And then the leading ones are also kind of interesting too, where they're a little bit more predictive. The Bollinger Bands themselves are one that fall into the lagging category. They're not predicting where something will go or suggesting any, this is gonna spike or this is gonna drop. I mean, it does have some tendencies when we get into how you trade with Bollinger Bands, but generally the entire calculation and the way that it works is it's a lagging indicator.
Is it?
And I think, and to go into that, to add to that, is I think investors, the newer investors or even seasoned investors, you want to educate yourself on kind of economics and theories, market theory of what happens when, let's say, you have the volume or I should say the candles. If somebody's using candles and you have a green candle on an uptrend that hits the top of the Bollinger Band, in theory, what should happen? So I think, yes, Bollinger Bands are good for a kind of not necessarily predictive, but when you combine it with another indicator,
Is there
another item that can be leveraged,
is there
you
any
maybe
data
can
or
predict what's
research
going to
on
happen.
how
So you
accurate
don't just want to have
these
that one
indicators are?
indicator tell you what to do.
Yeah, there is. I was looking on FinViz and Wikipedia and a few other sites as I was kind of researching the effectiveness of these different bands. And there have been studies, and they actually show that, many of these are very similar, if not worse, than just a long-term buy and hold. Isn't that interesting? Now that's if you program a computer to just act on some simple rules that you make about any of these indicators in isolation without any sort of human thought. So I'd like to think that humans using their brains, looking at what's going on in the world, the fundamentals, several indicators combined together, can probably do better of that. But one of the studies I read about on FinViz, it says the Bollinger Bands themselves beats the benchmark, which is like maybe you buy SPY in a buy and hold for 5 days with the setting at 50,3. In other results, it's comparable to random trading.
Well, no,
And I wanted to conclude with that, actually, but now no one's going to listen.
I'm glad you brought that up. And I mean, for people that don't know, I mean, our show is, we do a lot of research. And
done. All right, guys. Show's done. Have a good day.
Have a good weekend. See the surprises that come out, with our questioning and with our different ways that we go. Yeah. But I think that's very important information for people to just sort of, again, have as they. I mean, that goes back to my initial comments. This kind of stuff. You guys are doing. You guys have your financial house in order. This isn't like the first thing you did as an investor.
No.
So
yeah. No, this is just we're learning about these every day. So let me get into kind of the quick and dirty basics about Bollinger Bands. So for that, let's go back to 1950. A young man, John Bollinger, was born in Vermont. He studied. No,
I'm actually looking him up right now.
Go into.
I'm looking him up right now.
He's probably John. He was probably John.
He is an American author, financial analyst.
John in adulthood. Yeah,
he was. He's 70 now. Contributor to the field of technical analysis and the developer of Bollinger Bands in the 80s. And rumor has it that he was on a radio show just talking about stocks and technical analysis and whatnot. And the host asked him, "Dude, what are those things on your charts there?" He was totally unprepared for the question and just said, "Oh, those are Bollinger Bands."
Wow. Are you being serious?
Is he really?
Serious?
And also, rumor has it he is also a Tesla fanboy. So
sorry, listeners. We're trying to give you information, but not always.
Really, guys? Come on, you guys.
Right.
Yeah,
well, it is.
You guys.
Okay.
You guys know the gullible's not in the dictionary.
So let's
right?
get to the meat of this thing. So John Bollinger, he makes. Are you guys familiar what a EMA and an SMA, a simple moving average, exponential moving average? Normally that's kind of like the basic indicator, and depending on your time frame and how you like to trade, you can turn on different ones. A lot of people use the 50-day, the 200-day, the 50, or the the 21. Well, the Bollinger Bands by default in most trading packages, I believe, uses the 20 SMA. 20 SMA. Sorry, it's the 20 EMA exponential, which gives more preference in the moving average to the more recent data points in price. So the Bollinger Bands are 3 bands, and they basically are going to help you understand the volatility of a stock. They're going to help you understand how volatile the stock is trading at, and it will help you answer the question, is the stock overpriced, underpriced, or just about right? With the kind of common sense, it's very much common sense, but the 20 EMA is kind of like the price it should be at. And the upper band is going to be 2 standard deviations up from the the 20 EMA, and the lower band is going to be 2 standard deviations down.
Okay.
So that gives you a 95% confidence when you're trading or looking at these things that the stock price will stay between those bands.
Okay, that is really awesome, Jerry, because that is such a key point about. And I'm a big believer. Entry point into an investment matters, right? Yeah. Entry point matters. Entry point matters if you're buy and hold long. And I mean, that's why most people are doing dollar cost averaging, right? Every 2 weeks, if the market's down, you're buying more shares. But if you're making these investments, entry point matters, and kind of having a sense of if the stock is reasonably priced. I mean, that's why we look at other things, right? Like P/E ratio, right? Price to earnings ratio. Yeah. So there's another tool that people have. Right. Okay. Got it.
So there's 3 different ways. It's like, why does this matter, right? That's kind of the question. We're talking about these bands, and it's 2 standard deviations above and low. So it's like, okay, how do I use this to trade and make money? Right? That's basically what we're all wondering here. So one, it can just be used as a overbought, oversold indicator. And if you guys have traded using the RSI, which sort of oscillates between 40 is the low and 70 is the high. It's kind of like that, but different. So you can use that to help you with your entry points, like you were just saying. So it's purely just looking at it, you can tell if it's overbought or oversold, depending on where it is. And if it's near the top Bollinger Band, it's considered oversold. And if it's near the bottom one, it's considered overbought. And then at that point, you can decide whether or not there's a trend change and you need to go with it, or it's going to bounce, and because it's it's one side too far, too high or too low. So that's one use of it.
And I'll say, I'll say that with the RSIs that because typically with these some investors have different. We talk about like the simple moving average, the EMA and SMA, 20, 50, 100, 200. People have preferences, right? And I know for me, particularly with the RSI, I actually go 70-30 on my RSI range, because I think especially with the volatility of this market right now and the unpredictiveness of this market, we have seen some overselling occur with the retail investors, and we have seen things drop way below the 40 point. Where if you go to a 30 point, you kind of get a better capturing, because even Bob, with that, I've seen things go down into the 20s.
So Tesla and, RSI indicator.
Then you're ready for it to spring off.
So you can take any stock and you can look at the Bollinger Bands and you can look at RSI, right? It's pretty easy to look this stuff up, right? So
yes.
What are you guys finding for Tesla as an RSI? I'm seeing
Oh wow,
absolutely.
That's not
right?
putting us on the spot.
But it's interesting. There's different things going on because it's go ahead.
Right. Well, okay. So here's what I'll say is that but the RSI isn't particular to like the stock itself. I think it's just in general how, for me, I use 70-30 as my range when looking at any stock. Doesn't matter what it is. I use 70-30, and that's just my personal preference, and just because my thought on how the market's reacting. Where Jerry may do the 70-40, and that works better for him with Bollinger Bands.
This is interesting stuff. And then when you type in RSI indicator, it comes up with that MACD
that's just
number as well. So, which we'll get into. But anyway, okay.
Yeah, let me wrap up Bollinger Bands, and we can move on to RSI. I mean MACD. So so one use is just overbought, oversold indicator. The second use is the second and third uses kind of are interesting because they will change based on if you're in a trend, an uptrend or a downtrend, or if you're just kind of in low volatility moving sideways. If you're just in low volatility moving sideways, there's something called the Bollinger Bounce, and that works when it's trendless. And what happens is these stocks tend to hit the top range, 2 standard deviations up, and then they'll kind of bounce off that and go towards the bottom, and then bounce off that and then go back up to the top, and they'll just keep doing that. indefinitely until you see a trend change, which comes to the next one. The third one is called the Bollinger Squeeze. So when volatility starts to get really low and the sideways trend, the top bands and the lower bands are starting to converge together, that's when it's a squeeze. And at that point, you will probably see some sort of extreme push to the upside or downside, depending on the overall trend of how it's trading. So when you look at this Bollinger Band, I mean, it's got quite a bit of things and uses going on. There's at least 2 or 3 things, and then you have to know whether or not you're in an uptrend or a downtrend, or you're trading sideways. You can't do the Bollinger bounce when you're in a big uptrend, right?
This is good stuff. I love it. I mean, all these tools, again, it helps you because you might, maybe someone is sitting on the sidelines with some money, and they do want to invest in what, company XYZ or Tesla or whatever. And then I think this would just give them much more information in terms of when to pull the trigger on that. So.
Oh yeah, because one of the common questions is always, what's my entry point? Where's a good entry point? And I think, leveraging the indicators and what works best for you, really helps you, because you can see something being on a tremendous uptrend on this huge swing, going parabolic and crazy, and people will get trigger shy and they're like, I think this thing's done. It's going to drop now. I've missed my opportunity. And then you'll get ones that are just gung ho and FOMO, and they're just jumping in, right? They're like, I'm going to get in this. But you may look at an indicator on the charts and see that this thing isn't done running yet. Looking at these indicators, this thing will actually keep going, and I'm actually still good. So, right. And so I think that's definitely it helps with that question of where's my entry point, is adding in some sort of indicator component. I honestly think it's mandatory. Like, if you're going to invest and you really want to run with this, you should learn some indicators and learn what's going to work best for you.
Random.
It's nice to have I like their guardrails or guidelines that just kind of give you a little bit more information about where the stock's been, where it's going, and kind of where it falls in the grand scheme of things, so you can make a better informed decision. It's not the only data point, but there's more. We should probably move on to
moving average, convergence, divergence. Wow, make that simple, guys. Come on, break that down simply.
The Mac Daddy. Yes. So MACD, I've been leaning on a little more as of late, and it actually is helping a lot. So the moving average, convergence, divergence, there's a few components of it. So when you pull up this indicator, it's gonna bring a separate field down below your chart that's kind of like you see like an RSI or a volume, and you're going to see lines. You're going to see these bars that look like volume, kind of going above and below like a zero line. So the first components are this, and this gets hard without actually having something visually in front of you for the listeners, but you're going to have one line that is considered your MACD line, and how that line is calculated is your 12 EMA, so your 12-day exponential moving average, excuse me, minus the 26 EMA. So your 12 EMA minus your 26 EMA will make up your MACD line. So that can be a positive to a negative number, right? Then the second line you're going to see is your signal line. So that signal line is going to be the 9 EMA, the 9-day exponential moving average of that stock. And it's going to be a little bit smoothing. You're going to see it's actually going to be a little lagged out. Then the the third component you're going to look at is what's called the histogram, and that's where they look like these volume bars. When something is on an uptrend, and I hopefully this isn't different for each platform, but when something is going on an uptrend, you're going to have dark green bars. When it's starting to fade out from that uptrend, they go to like a light green, and then when it goes bearish, you see dark red, and then when it's recovering, light red. Okay, so you'll see these color variations in these bars that will also tell you direction, right? So now we got this picture laid out. So where it plays a nice role is your MACD line. When it's crossing over your converging point, your convergence with the signal line, with that 9 EMA. When it's crossing over that, and it's you're positive, and it's now crossing over that line, going to a downtrend, that is an indication of a bearish move or a bearish market. So that may be the point where you're placing a put, or somebody's trying to short the stock, right? And that's where you'll start to see it just do this flow down. Now, when we talk about leveraging other indicators to coincide with this stuff, you definitely want to consider these other factors. You want to look at, is there PR? Is there good PR out there, right? Is there good positive information in the market that this shouldn't last long, like this shouldn't dip for long? So maybe you're just at a hold point, you're going to just see a little sell-off and you'll see a recovery. You want to look at volume. What's the volume trading looking like when this occurs? Because sometimes when that MACD line crosses over the signal line looking to go on a downtrend, it may start, but then it has so much volume behind it. Something goes down pennies to maybe $1, and then all of a sudden buyers jump in, and it just fades, and then it rolls back up. Okay, so it's with caution when you see this crossing that you understand what other indications could actually prevent that from going to a full fall to now dropping 5%, 10%. So on the flip side of that, if you've seen this stock price just drop off, a lot of people selling off, and you're looking at this MACD chart and you see the MACD line starting to roll up towards the signal line, and you see that cross point, that would be possibly a good entry point, as long as you start to see again the volume there that it's going to continue driving up. So using the MACD as like a foundational support to your trading, along with understanding candlestick patterns, I would say, like that's another one I love, is candlestick patterns. Works very well with MACD to understanding. Now, the kind of asterisk here to MACD is you also have to figure out what your trading style is. So it's very important that if you're a day trader, right, if you're a swing trader, if you're a long hold. So if you're a day trader, you're typically going to be looking at a 1-day chart with maybe, I don't know,
if that
5 to 15 minute volume candlesticks, right?
Maybe a 1 minute,
Well,
or if you're
one of the
fancy,
tricks
you
you
can
want
do
to
tick by
do,
tick
if that, right? I mean, you could very well be hitting on 1 minute 30 seconds. Right. And so that's absolutely true. Like it just really depends. You may have like 3 of them up, right? You're watching 30-second, 1 minute, and 5 minute, or 15, 31, right? You could be watching multiple at one time. So if you're a day trader, I think the foundational chart would be a day chart right? So what you want to do is you actually want to shift to a weekly chart and look at the MACD and see what the trend is. So look at the bigger picture, because that will help drive when you look back to your 1-day MACD. That will give you a better predictive component to what's going to actually happen. So if you're a swing trader, you're typically looking at a 1 week chart. You want to see what's going on for the week. So again, you're going to shift back to your 1 month chart, look at the MACD, look at the history, see what the trends look like, then
Similar
go back
question
to
that I asked
your
Jerry
1 week
before.
chart to then try to make the better
How accurate is this kind
guess
of
on what's
this
happening
stuff with the MACD? Does it work?
So I did read a statistic, and it was I think it was Investopia. It was talking about 80% accuracy based off leveraging the MACD chart in combination with other indicators.
So
you're getting 80% accuracy.
Interesting, because I looked on
pretty high.
FinViz too, and they have this section on effectiveness. They make these rules whenever that cross happens. The bullish cross you buy, the bearish cross you sell. It wasn't much better than just a buy and hold type of strategy from their study. They did some back testing.
Yep. And so this is why I say that again to it is that you want to have it in conjunction with other indicators. Because if you're using just MACD alone, right, you're not going to make the best guess. You're not going to make the best judgment. And that's where I love trending out on candlesticks. I'm a huge fan of looking at the 1 year chart, the 6 to 1 year chart, and finding the pattern. So finding that pattern with the candles, and then lacing that in with the MACD.
Interesting.
Yeah, this is awesome.
That's very cool.
I hope we've given our listeners just a few more introductions to tools, right, that they can use to make better decisions. Yeah. I've learned a lot because I frankly, guys, have not used these types of indicators and tools really at all when making my investment decisions.
I've been using the MACD on the ES minis, the micros, micro ES mini S&P 500. I did this course with Don Singleton, I believe is his name. I may have mentioned him on a previous podcast. His entire thing is just using the MACD on futures. And I still need to practice because I haven't made money doing it. But what's important, though, he says, is to usually one of his guideposts is that the signals have to be diverging, showing strength, so that histogram will go up and the bars will start to get longer, and the distance between the 26 and the 12 are kind of going outward, and that makes a big difference. If it's just a weak crossover, right, it may not sustain. But you want to look for like the degree that, like if you have a 90-degree angle of the 12 going over the 9, that's awesome. I mean, that doesn't normally happen. Yeah.
Oh yeah, and it's a huge, and that's a divergence trade method, right? So that's and that's the other thing to understand with MACD, right? That's why convergence, divergence is in there. Is there are two trading methodologies to MACD. There is the convergent trader and there's a divergent trader, and both in their own right could make you a lot of money. Because even when Jerry's talking about the divergent method, is that when you get this extreme strain on those lines, it's like a rubber band, right? It's just they're just pulling apart, and at some point they're going to give. That is the way the market is and has always been, is that you will get these extreme strains, but at some point something will give and you'll get a snapback. And so there are the divergent traders that also do very well on that snapback, but again, the right indicators need to be there that's going to happen, and especially if it's going to be on an uptrend. But to keep in mind is that with the divergent, I feel is more of a short-term seller strategy, because those snapbacks can be very fast, and you can see skyrocketing or just
tools,
fall
guys.
into the bottom of the ocean.
Once again, the time goes fast. as it always
prices.
does, because we're having a good time.
So
We're
just be
enjoying
mindful.
ourselves and drinking wine or something. I don't know.
Yeah.
But hey, this is really good
Wow.
stuff. And we got an exciting week next week coming up. We got earnings week, right?
I love it.
There's lots of earnings, so
Yeah.
we're going to be checking that
Lots
out.
of
We'll probably
earnings.
be doing a recap on that next week.
Tesla,
next week,
Netflix,
etc.
Logitech.
So join us next week where we talk about earnings, and then we're also going to talk about financial independence and retire early, FIRE, which is something that we write a lot about and are very interested in. Jerry sent me an awesome article or podcast this week that really inspired me by Karsten Jeske. And it was an interview. I think he was interviewed by Morningstar about cracking the code on retirement spending rates. But as you dive deeper into it, and I did some research on him, he's just one of these really awesome FIRE guys that pulled off an early retirement, I think at the age of 44. And, again, my thing about these people is, even if you don't end up retiring that early, it can't hurt to model some of their behavior, and to find those ways to be stronger financially. I mean, maybe your FIRE number is, 57 or something, or 56, but bottom line is you're going to be in a much stronger position. So we'll be talking about that next week. Anything else, guys, before we go? Keep on trading. All right.
Keep on trading. Keep on trading.
No. Keep trading, man. Keep it alive. Keep it alive. And here's the thing: I'll say is that I like going on stock twits and going in those forums and whatnot. And somebody posted something lately about their just heavy loss, just losing a lot of money, and they put a screenshot of their Robinhood account and they had lost a lot of money, and it was down about 90%. And I could see right below their chart is that they had options was, the next section. So I could see they were trading options. And just the advice I have out there, because I know just recently, Jerry and Greg, I've talked to you guys about it. I've recovered from this, is you go to heavy losses, you got to go back to basics, and just know that if you're an options trader and you love options because there is a high risk, high reward, and you're losing big, take a deep breath, step back, get out of options, get back to the trading of stocks, the foundation, right? And I think that's a big thing. I just learned recently, I've seen a lot recently, and I think people need to just remember to step back to basics before they venture back.
All right, brothers.
So that's...
See you next week.
I love it. Mic drop, done.
Bye-bye. If you haven't heard about Anchor, it's the easiest way to make a podcast. Let me explain. It's free. There's creation tools that allow you to record and edit your podcast right from your phone or computer. Anchor will distribute your podcast for you, so it can be heard on Spotify, Apple Podcasts, and many, many more. You can make money from your podcast with no minimum listenership. It's everything you need to make a podcast in one place. Download the free Anchor app or go to anchor.fm to get started now.
Hey everyone, this is Jerry from the Money Vikings. Today is October 18th, 2020. For tonight's podcast, we're going to talk about Bollinger Bands and the MACD indicators.